The approval of the ETFs was a pretty concrete endorsement of Bitcoin as an asset class by the regulators. What we've got is 900 Bitcoin a day. And around April 16th to April 18th of this year, we're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin. Approval of those ETFs meant that it doesn't matter who wins the 24 elections. It's taken the future of Bitcoin out of the hands of the president. It's taken it out of the hands of the next head of the SEC. Pretty much opened Pandora's box or crossed the Rubicon. When you study the history of the world, whether it's the story of Western civilization or Murray Rothbard wrote some really detailed books on the economic circumstances in the United States before Revolutionary War, called Conceived in Liberty, or he wrote an Austrian economist view on the history of economic thought, and so the history of economic thought for thousands of years. And when you listen to those things at the age of maturity, you understand better and differently than when you, first of all, I didn't read it, in my teens or 20s. And now I do read certain things. But the second thing is if you've lived long enough, then when you read the stories again, you understand what happened, and it makes a lot more sense. So, and it's very relevant to Bitcoin, because what you see is you see the tension between chaos and order, and between authority, those wishing to impose authority, and then those wishing to promulgate freedom. And also, it helps you to overcome a lot of tropes, a lot of cliches. For example, people have been creating money or currencies for thousands and thousands of years. Every single one of these stories, it always starts with a new ruler, a virtuous society, a new currency. They keep it strong. They expand. Everybody trades in the currency. Then they expand some further. Then they have to fight a war. Then they print more money to fight the war. Then they debase the currency. Pretty soon, the currency isn't worth anything. People don't want to trade with them because they debased the currency. They inflated it away. And then at some point, the soldiers realize that the money they're being paid in is worthless, or the soldiers don't get paid. And when the soldiers don't get paid, they all mutiny or they desert. And then invariably what happens then is someone outside of those borders wins the battle. And of course, that civilization blames their decline on the barbarians. Like, it wasn't our fault. It was bad guys who speak a different language or have a different religion. They actually attacked us unprovoked. And the story is always bad people caused the collapse of our civilization. But the real story generally is the civilization got fat, dumb, and happy, and then they got arrogant, and then they started counterfeiting money, and then they forgot that you can't pay your own soldiers with counterfeit money. And somewhere between the people starving to death or all the soldiers deserting, they found that they weren't able to continue with the wars they were fighting. And then the next society rises, and then they do it all over again. And it happens. It's not a dozen times. It's not 100 times. If you read this, it's thousands and thousands of times you see the rise and the decline and the fall and the reemergence. And there are always these common principles, and the principles have to do with power and energy, right? The societies that don't know how to, if you don't understand firepower, like the Japanese, they didn't really want to embrace guns, so they just passed a law, no guns. And then the Westerners showed up with guns. The same thing happened in China for a while, where they wanted to close their borders, and so they were against modern techniques. And then the Westerners show up with firepower, and then the borders get open, and then the political power structure collapses. And then at some point, someone comes up with a better cannon, and the people in denial lose the next battle, and then somebody comes up with a better ship, and then the people in denial have less sea power, and so they get choked to death, and then someone comes up with a tank, and then there's airplanes, and it goes on like that. It's always about harnessing power, harnessing and channeling energy. I really like listening to that or reading those histories. I think you can learn a lot from them. And the most useful thing you can learn is this is not the first time this has been done. In fact, it's common throughout human history. Every single civilization, it failed because either it couldn't channel power, it was less powerful technically from an engineering point of view, right? Or because it couldn't channel capital, like economic power, and its monetary systems were completely defective, or they were inferior, right? The society that trades glass beads gets stomped on by the society that trades metal coins, and the ones that trade gold coins stomp on the ones that trade copper coins. And then even then, you believe that gold is money. The Spaniards go off, conquer the New World, they bring back all the gold. It doesn't solve the problem because they inflate the gold supply by a factor of 5, so they created hyperinflation. Their own economy collapsed, and the Spanish Empire collapsed because they didn't understand the implications of inflating the money supply. And they figured that out the hard way 1,700 years after the Romans figured it out, and they figured it out 500 years after the Greeks figured it out. And it happened in Egypt, and it happened in Assyria, and it happened in China. And it's happened as many times as we can write it down. And it's probably happened 100,000 times that we didn't write down.
I wanted to get to the big catalysts that we've had at the beginning of this year, and it was, of course, the launch of the Bitcoin ETFs. And although it was a bit of a rocky start the first few days that they were trading, it now looks like that a monster has been awoken, and this huge amount of money is just pouring into Bitcoin from these ETFs every single day. BlackRock right now alone currently holds 115,000 Bitcoin worth $6 billion. I wanted to ask your thoughts on how the Bitcoin ETFs have gone over their first month of trading. Were you surprised with how popular they were?
I'm not surprised they're successful as ETFs because Bitcoin's the apex ETF. The other ETFs are based on oil, like let's say commodity ones, oil, gold, platinum, silver, palladium, market baskets of commodities, natural gas. All of these things are defective as investment assets because physical commodities aren't scarce. Physical commodities can be manufactured in any amount with additional capital and know-how. So ultimately, the best of them is the gold ETF. But if a bunch of money flows into a commodity ETF, that just actually fuels capital into commodity producers. They just dump that commodity on the market, the price gets held down. So commodity ETFs were never that great an idea. On the other hand, comparing these Bitcoin ETFs to the S&P index, the biggest ETF and maybe the biggest development on Wall Street was the launch of the SPDR, SPY, in 1993, about 30 years ago. And the idea that you could create an ETF that represented a market basket of 500 stocks, that was big. And especially that was big because that came along at a point where people had lost faith in the currency as money, as a savings technology. And so they were trying to figure out what is money. And actually an entire generation of people picked the S&P index as money. The S&P became money, and that ETF became the monetary index. And that's why today, amongst, that's the most successful ETF. If you look at SPY and all the S&P index type ETFs, they have most of the capital in them. But the problem with those ETFs is that stocks also are not conservative. So if I increase the price of the stock by a factor of 10, you're getting more equity. Or if another way to say it is, if I take hundreds of billions of dollars of cash and I buy the ETF, like S&P ETF, the ETF has to buy all 500 stocks pro rata, which means they're going to have to go buy Tesla and Apple and Google and Meta at any price. They're price insensitive, even if they're overpaying. So when they buy it at any price, what they're doing is they're creating more equity because they're encouraging those companies to issue more stock. And then, of course, this is common sense. If the price of your stock doubles, the employees in the company with stock options, they sell the stock, right? They sell the stock option. When they sell the stock option, You put more stock on the market. So the price creates supply. There's a price supply elasticity there. It's the same as you have with REITs, real estate investment trusts, and it's the same thing with bond funds. When you have capital flows into all those other asset classes, you create supply of that asset. They're not scarce. Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. You know, what we've got is 900 Bitcoin a day. And around April 16th to April 18th of this year, we're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin, because you're talking about, it's the equivalent of someone coming in the market saying, I'm going to buy $8.5 billion of Bitcoin a year for the next 4 years, guaranteed. That's the demand impact, right? $8.5 billion, $23 million a day at the current price. Now, that's a huge amount, but more importantly, that's a huge demand-supply shift in the year when the demand via the ETFs has jumped by a factor of 4 to 10 times the daily supply. And then you have the supply getting cut in half. And, what happened with these ETFs? Well, here's what happened. The approval of the ETFs was a pretty concrete endorsement of Bitcoin as an asset class by the regulators. And anybody who's thinking about banning Bitcoin or not approving Bitcoin ETFs, they're now out of consensus. So it really flipped the global consensus from, well, maybe it's too good to be true, maybe it'll be banned, maybe it won't be banned. The approval of those ETFs meant that it doesn't matter who wins the 24 elections. It's taken the future of Bitcoin out of the hands of the president. It's taken it out of the hands of the next head of the SEC. It's taken it out of the hands of most regulators in the world. We pretty much opened Pandora's box or crossed the Rubicon. It's very concrete at this point. And it was uncertain, right, before. And so that's a very big piece of regulatory clarity. What happened next is it's created a positive dynamic where now I think you're seeing pressure to approve ETFs in other places in Asia. You'll probably see Hong Kong spot ETFs. You'll probably see them get approved in any country where people are on the fence. It also created a fee war. It used to be that you paid 2.5%, to hold your money in Grayscale. And all of a sudden now you're paying 1.5% at Grayscale, but you're paying 25 basis points at BlackRock, or you're paying 20 basis points and even 19 basis points. Not only that bring down fees for institutional holders of Bitcoin in the US, it also put pressure on international fees. So you actually saw a rippling effect, and people with European or Canadian or other spot ETFs in the rest of the world that had 100 basis point fees or 150 basis point fees, they're having to bring down their fees because otherwise the capital will flow out of their instrument into the lower cost instruments. So you start to see money flowing from gold into Bitcoin, from real estate into Bitcoin, from the S&P index into Bitcoin. The launch of the ETFs, it's been very successful. This is the ideal type of asset to put into an ETF wrapper. It's definitely it's the global asset. It's the biggest brand. Everybody knows what it is. It's actually the best thermodynamically sound investment. It's got the best historic performance. And of course, it doesn't have the entire array of risk factors that a company has or that a bond has. It doesn't have credit risk. It doesn't have corporate execution risk, and it doesn't have currency devaluation risk. And it doesn't have the physical risks of real estate. It's not going to ever get hit by a bolt of lightning. There's not going to be a tornado. It doesn't have maintenance decay. It doesn't have property tax risk. It doesn't have the political risk. Right? Ask yourself the question, you got $1 billion and you got to buy some real estate in Africa. Where? And where do you want to invest $1 billion in a building? What country? What city? Where? Or you can buy Bitcoin.